What's up, everybody? Jake from StratGeeks, ORS Fusion. Yeah, today just want to talk about how amazing yesterday was. I think it's the best day that we have ever seen with ORS, and we deserve that because, as you can see, we've been pretty flat from like about the election, and then we increased here. So the election was like right around in here, 18,000 or so, and then we're up to 19,348, and then we went down to 18,337. Then we're back up to this little double top here, 19,113, and then yesterday we had 7 winners in a row. And now we're up to 27,331. Pretty amazing stuff. So in this video, we're just going to talk a little bit about this historical backtest and how it matches with the live results. 95, maybe even up to 97, 98% of the time. Pretty cool. And we've been noticing that month after month, day after day, trade after trade. So let's look at the summary. And this is a 180-day backtest. Now, there's a reason that we do 180-day backtests and we don't do 1-year backtests or 2 years. It's just the limitations of NinjaTrader are such that 6 months is, honestly, as far back as I want to go because I want to make sure we stay as accurate as possible. For me, the backtest is everything. The accuracy of the backtest is everything. I have developed many a strategy where I got my hopes up only to have them dashed 1, 2, 3 days later after running the thing live. Not because it lost money, because oftentimes they would, but you'll have that with trading, but not because of the performance, but because the trades that were executed live day after day would not match the backtest trades of that particular day. So then my psychology was just basically my desire to follow the rules after that was basically just in the gutter. In the gutter. So right now, 6 months, that's long enough, man. Over 700 trades on the 1-minute chart, 95%, 97% accurate backtest to live results. I mean, come on, like how much do we really need? Anything more than that, we start to get into historical data issues with NinjaTrader. There's just a certain limitation that NinjaTrader has. Here's what ChatGPT has to say about it, and I know this from live experience. So if we look here, where is it? Oh yeah, I guess this is it. Here, we can read this. Let's talk about, I was like trying, it's like, hey, what about a 30-day? How's that? And obviously it's going to say 30 days isn't enough. So I had a long conversation with it all the way, lots of conversation with it, asking it a bunch of different stuff. And then I asked it to summarize in the most concise way possible. And I also didn't want it to mention that we have the 97% accurate backtest to live, because what does that really have to do with it in context of ChatGPT? So here's the summary of why a 3 to 6 month backtest is optimal with NinjaTrader. A 3 to 6 month backtest provides the perfect balance of accuracy and relevance for trading strategies, and here's why, according to ChatGPT. Number 1, minimizes the contract rollover issues, and absolutely that is number 1. I'm glad I put it as number 1 because that is I've seen stuff where there is no, like, we have a subscriber that's also seen stuff where he's like, that's not what happened. Like, he'll go back to previous contracts and he's keeping some data on stuff, and he's like, well, that's not exactly what happened, or that wasn't the opening range size on that particular day. So NinjaTrader does a historical what do they call it, contract merging, but it's not perfect. And the farther back in time you go, the shakier everything gets. Minimizes contract rollover issues. Longer backtests often face pricing gaps, which is a huge thing with the contract rollovers for sure. I've seen it with multiple different systems that I've used. Liquidity shifts and execution challenges due to futures contract rollovers. This is what we want to avoid. Distorting results. If my backtest, or if your backtest that you're using now in your strategy does not match the current strategy you're using, does not match your live results, I mean, dude, at least 85, 90% of the time, then why even bother? You might as well just trade manually, you know? Number 2, reflects current market conditions. Markets evolve quickly. Data beyond 6 months may not capture today's volatility, liquidity, or trends. Number 3, statistically robust, and I told it we had 300 to 700 trades. Statistically robust, and it agrees. 300 to 700 trades within this window provides enough data for reliable conclusions without being diluted by outdated conditions. And finally, number 4, avoids overfitting. Sticking to recent data prevents optimizing for outdated dynamics, ensuring strategies perform in real markets. This time frame ensures strategies stay accurate, adaptive, because, you know, we do need to adapt sometimes. What if we find some settings that are a little bit better? That's okay. Adaptive and effective for today's trading landscape. Then I ask it, what if traded 30 days? And it's like, yeah, no, I don't think so. Pros and cons, blah, blah. But it doesn't really matter because we don't do a 30-day backtest. We do 3 months minimum, and now we've been doing 6 months. So 3 to 6 months with the 1-minute NASDAQ micros, which is what we trade on, is, over 700 trades. And here we can see total number of trades, 713, with a win rate of 61.29%. Oh no, it's only a 61.29% win rate. What are we going to do? I don't care. 61.29% is amazing. It's a 1-to-1 risk-reward ratio. So if you think about 10 trades, 6 over 6 of those 10 trades will be winners, 4 will be losers. It's a 1-to-1 risk-reward ratio. So if you win 100, then on the next trade, if you lose, then you're going to lose 100. So we have this really cool thing that maybe I'll actually go over in this video called risk smoothing that we've developed specifically for our strategy. So when you sign up for ORS, not only do you get a workable, tradable edge, you also get a whole plan on how to, I guess it's a plan. It's pretty simple once I start explaining it. But you basically get a risk management model and a trading edge that is accurate as far as the historical to live. And on top of all that, it's 100% automated. Living the dream, baby. Living the dream. Yesterday we had 7 winners in a row while I was sleeping. I'm here in Bali, and I am sick and tired of staying up till 2, 3, 4 o'clock in the morning in my upside down world here. It's like pretty much literally the opposite of Eastern Standard Time here. Now that the time change happened, it's an hour off, but basically if it's 10 p.m. here, it's 10 a.m. Eastern Standard Time. And the time thing, I'm just not doing it anymore. I'm letting ORS do its thing, totally unaided by what do I know anyway? I bet you I wouldn't have gotten all 7 wins had I been awake. I probably would have stopped it like, oh, how could it possibly get more than 4 wins? I'm going to stop after 4. Well, ended up getting 7 wins in a row. It's the best day we've ever seen with ORS, so I'm motivated to make a video. Can you blame me? So 713 trades. Let's go ahead and talk about the risk management. So 713 trades. You can see here our largest winning trade. This is NASDAQ micros with just 2 micros over 180 days. And this is just with 1 account. So, if you had a live account, $5,000 live account would be enough where you'd be pretty safe with this model that we're working here. But but most of us use prop firms and then have multiple prop firm accounts. So like right now, I mean, I got over 10 performance accounts with a certain prop firm. So if you look at that 20,731 times 10 accounts in 6 months, we're talking over $200,000. I cannot harp enough on the accuracy of our backtest to live. Maybe we should talk about that first. Let's talk about that first, actually. But yeah, you can see here 437 wins, 1-to-1 risk reward ratio, minus 276 is 161 net wins over a 180 calendar day period. Now, how much do you want to, I'm kind of all over the place, I'm excited. How much do you want to risk per trade? Well, we can see here that our average winning trade is $141. Our average loser is slightly bigger, and that's due to commissions. So we'll just say it's about 140, 150 bucks. Let's call it 150 bucks. Our average winning trade, our largest winning trade is $257. Our largest losing trade pretty much happened on that same day, I can tell you right now. It's $269. So with our risk smoothing, maybe we will talk about that first. I don't know. Let's just flow with it. We're never going to get a $257 win or a $269 loss with our risk management protocol, because we adjust our contracts up and down depending on the size of our targets, and we know what our targets are for the whole day once the opening range closes. It's one of the most amazing things about this strategy. So we had 161 net wins, and let's say we're going on average for $150 because maybe our account can afford it. So times on average $150. Maybe some days you might be a little bit more than that. Some days it might be a little bit less, but we're going to try to go for $150 per trade. There might be a smaller opening range, and I'll get some visuals going with this in a second. But there could be a smaller opening range of like 150 ticks or something where you're going to want to risk some more contracts because the targets are smaller. So we call this risk smoothing or target smoothing. So we have 161 net wins over 180 days times $150 per trade equals, so we're actually over this. So 24,150, but we do have to take out the commissions. Let's go high on the commissions. So right now we got $1,739.72. Let's call that 2,000 even. So we're a little bit over that 20,731. So it's just, it is a back test, and it's not going to be perfect, but this is my best shot at it. This is like all of our subscribers, it's their best shot at it. We're going for it. It's what we're doing. So 22,150. I don't know how many videos, whoever's watching this video, I don't know how many videos you've watched about people pushing their strategies. And if you look closely at a lot of their videos, they will not have commissions included. Completely nefarious. Or maybe they're just too dumb to realize. I doubt it. When they're making the video, like, oh, maybe we should have commissions on there. Yeah, you should have commissions on there. If you're watching a video from some person selling a strategy and they don't include commissions, toss it. Toss that video in the garbage can. Yeah, man. And then also, if they're using market orders, keep an eye on those other strategies in the videos. If they're using market orders, your backtest is not going to be accurate. We use limit orders. Market orders are just they're aloof. They're just wherever they happen to be filled. We have limit orders, so the price needs to get to the market needs to reach a certain price. Otherwise, we won't fill. With a market order, it's just click buy and then go. So in backtest mode, that's kind of all over the place. So number one, make sure that they're not using market orders. Well, number one, make sure they're including commissions. Number two, make sure they're not using market orders. And then there's two other things. Break evens. Auto break evens in NinjaTrader backtests do not provide accurate to live results. NinjaTrader just can't handle it. It just cannot handle that data. It would be awesome if they could. I could make our win rate look like 80%, 90% if I threw auto break evens or maybe, yeah, auto break evens into the strategy, because some of them would only be like $20 wins, because maybe it's a auto break even to secure 5 ticks or 20 ticks or something, but you don't see that on the backtest numbers. So not only that, NinjaTrader's data, I don't care if it's CQG or Rhythmic or Tradeovate or tick data or minute data or whatever it might be, it can't handle moving a stop loss even like one time. If it moves, if your strategy moves your stop loss from its initial placement to break even, throw that backtest out. This is why I've spent so many years finally getting to this point with ORS where we do not use, I don't need to use break evens. And I mean, it would be great if it could, but if I can't trust the backtest, I don't care about the strategy. And then the fourth thing is auto trailing stops, which is basically the same thing as the auto break even. Your initial stop is placed wherever it might have been placed, and then auto trail stops are even worse. You're moving your in backtest. Imagine the stop moving, I don't know, 100 something ticks, 1 tick at a time, or 5 ticks at a time. It just, NinjaTrader can't keep track of all that. I wish it could. I really wish it could, but it can not. So I would much rather have a 61.29% backtest using limit orders, no auto trails, no auto break evens, than I would have an 85% win rate with a strategy that uses all of those things. Another thing to keep in mind is the 1-to-1 risk reward ratio at a 61.29% is great. Now, there's so many misconceptions about win rate. It's really one of the least important of all aspects to look at in a backtest. Because what if you had a 4-to-1 reward to risk ratio? Then you might only need a 30% win rate, and you could be crushing it. Or if it's a 4-to-1 inverted, you could have a 90% win rate and still be losing money. So this makes it really simple. We risk $100, say $150 to make $150. It's 1-to-1 risk reward ratio. On average, out of 713 something trades, 61 something % of those are going to be winners. And just count on 39%, call it 40% of those trades losing. Don't be surprised if 4 out of 10 trades don't make you money, because there's 6 out of 10 coming down the pike. If you stick to your guns and you stick to your system, that you're going to be making up for those losses. You know, like there's flat periods, and like anybody who signs up with us, I really try to hammer this in to their heads. Like, you could easily sign up with us right here on 7/3, on July freaking 3rd, and then you're with us through all of this flat period to the 18th. So you could be with us from July 3rd to the 18th. Your first almost 3 weeks of using ORS are flat. And you're like, I shouldn't have signed up. I don't know. I got to change systems. I'm canceling. Rah, rah. And then as soon as you cancel or change systems or something, as soon as you cancel, then blah, 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 blah. Or you could join up with us here on October 11th. It just sucks when people you got to stick with it we do 50% off the first month. So that's half off the first month. Use code webinar50. And then you still might need 2 months. You might need 2 months. So like, say somebody signs up here on the 11th. What are we in? On the 11th of October. You could have signed up on the 11th of October on a Friday, and all the way till the 31st. So from the 11th, 1, 2, almost 3 weeks, call it 3 weeks, all you did was just go flat. And then you got 1 week until your subscription's about to renew, and you don't renew it. and then you're still part of the Discord group, and then you see, and then you hear and see this. As soon as you quit. I try to tell people, I spend a lot of time with everybody who signs up. I spend a lot of time, an hour, sometimes 2 hours with people, making sure everything's all set up perfectly and getting to know them, and it's all sorts of stuff. And the last thing I want is somebody to give up after just a month, or 3 weeks or something. There's this whole period. There's a little flat period here. There's this flat period, and then there's this flat. I mean, I guess you could call this another flat period here from the 4th through election. November 4th, election was here, and then we're pretty much all the way to here on 12/6. So that's a month. Your whole first month, if you signed up with us here, your whole first month was down, up, and then kind of back down to right where you started. You're not having any catastrophes, though. You're not doubling down. You're not doing all sorts of crazy stuff because it's automated, at least. It's helping your psychology. And then you give up. And then 7 winners in a row. You've went from when you signed up on the 4th, say, 18,338. And if you would have stuck with it, then 20,731. Times 5 PA accounts, times 10 PA accounts, you're looking at easily being able to make up for having to run the strategy for an extra few weeks, right? So I really just been trying to hammer it. I'm trying to hammer it into my own brain too. Like, expect flatness, expect drawdown. It's a real strategy. It's an accurate strategy, and we have a winning strategy. But if you don't stick with it, if you don't stick with it for at least 2 months, I mean, you might as well barely not even sign up with us. I mean, you got to commit to an automated strategy like this. I kind of got to commit to 2 months. I highly encourage everybody just to commit to 2 months, What else was I going to talk about? Yeah, let's actually look at this trading day. Let's do that. So here it is. Here's the amazing day that we had yesterday. 7 winners in a row. We got 1, 2, 3, 4, 5, 6, 7. This is a historical mode. This is backtest. But the coolest thing is every single one of these trades actually executed live. Amazing. Not just for me, but for my partner. I saw him post his trades, same exact trades. Excuse me. I saw other people had the same trades. And then in backtest mode, it all matches. Incredible. Absolutely incredible. So, like, what's up with this? How do these trades even execute? Might as well go into that too. Let's make this an awesome video. Okay, so ORS stands for Opening Range System. So here is 9:30 a.m. Eastern Standard Time. The market opens right here. All right, and then we put in a low, and then we put in a high, and then a few minutes later we put in another low. So now, and then 1 minute later we put in another low. So we call our opening range the first 15 minutes. So here's 9:30 a.m. Eastern Standard Time, and then there's 9:45. So we have 15 minutes to plot the highest point and the lowest point in this 15-minute window. So there's the lowest point. There's the highest point right there. And what do we have? 520 ticks. And we can take our ruler. I'm not going to be able to get this exact. From this high to this low. Almost got it. 522 ticks. So it's actually 520. You can see OR 520. Now, let's get that calculator again. And I want to talk to you about our risk smoothing, which is an intrinsic part of this strategy. A lot of people will sell you a strategy and not give you any idea how to manage the risk. Otherwise, it's just not this is a complete method, it really is. And we care about everybody. We really do. I mean, I actually meet on Zoom with every single subscriber. Another thing I wanted to mention is that we limit our amount of subscribers. Not as a sales tactic or whatever. No, we limit our amount of subscribers because this is my trading edge. This is my partner's trading edge. We don't want hundreds of subscribers to dilute our edge. We don't want people coming in and trying to steal stuff or mess stuff up or scam or whatever. So before anybody even signs up, you have to have a meeting with me on Zoom for 5, 10, 15, 20 minutes, half hour or something. I want to get to know you, want to know what you're looking for, basically a free consultation. You can sign up through Discord. Go ahead and do it like this if you want. Let's see. Let me pull it up actually. While we're talking about, while I'm thinking about it, where is it? So here. Oh wait, actually, I'll go to our. Let's do it like this. StratGeeks is the website. So if you want to get a hold of me, go to StratGeeks.com. I'm going to let it load and I'm going to bring it in here. StratGeeks.com. Pretty cool we were able to get this domain name. Pretty good. Good job, Eamon. And then just scroll down. Oops, it's not loading for some reason. Why is it not loading? Let's try this again. Still not loading. Let me try a different... Why is it not loading? I don't know why it's not loading. Let's try it again here. Sorry. StratGeeks.com, and then basically I just want you to get to join our Discord server. Come on. And then you could DM me. Yeah, it's not loading all the way. Actually, maybe it's better like that. Whatever. It's not loading all the way for some reason. But anyway, all you gotta do is just scroll down. There should be a video here and here. But just scroll down to where you see click here to join our Discord server. Join our Discord server and then message me, Jake at ORS, and say, hey, Jake, this looks really cool. Can we set up a meeting? And then I'll send you a link to Calendly, and you can book a meeting with me. Let's just X out of those. Maybe it'll load up by the time the meeting's over. Okay, so where were we? My ADD is kicking in. Look out. All right. So getting back to the strategies, what were we talking about? We were talking about the risk management. So we got our high and we have our low. 520 tick opening range, 520 ticks. Now we divide that opening range up into sections, into 4 sections. 1, 2, 3, 4. Divided by 4. That means each range level is 130 ticks. Let's measure one. About 130 ticks. Now, our target, though, is not just one level, one range level. It's 2. So let's get our calculator back. So it's 130 times 2. So our full target on this particular day, it's a rather large opening range, was 260 ticks. And we can come in and we can measure this trade right here was a long, and we entered here, and we exited here. I'm not going to get it exact. 260 ticks. If that was a loss, it would have been, so the loss would have been down here. 2 levels down. So we're looking for a target of 2 levels. We'll call that 200%. And we're looking for a stop at 200%. 1, 2. Now, as far as the risk management, so this is really cool. So we know that our target is 260 ticks, right? We took 520 divided by 4 sections, 130, but our target's 2 sections times 2. So 260 tick targets, 260 tick stops. And the NASDAQ micro is worth 50 cents per tick. So 260 times 50 cents is 130. That's $130 risk for every single trade that you're going to take on this particular day, on Thursday. $130. So if you're trying to go for a $150 risk, maybe you just want to use 1 micro on this day. Now, say you have a bigger account, or maybe it's a fresh account, you know, maybe you want to use 2 micros on this day. 2 micros would be $260. I'm saying, you know, like, keep it safe on if your PA account has a $2,500 threshold to basically blow up, then you might want to keep your risk under 150 or let it go a little bit over 150. You could go as high as 200. Definitely don't go higher. I wouldn't go higher than that. So we'll just say that I chose 1 micro, which is actually which I did, because I have a 50K account, and my trailing drawdown threshold is $2,500. So $130 times however many wins you get in this day. Well, this particular day was the best day that I've seen ORS take in a long, long time, but there was 7 winners. So it was a $910 day minus commissions. So it was like $875 or something. So now say you had an opening range day that was really small. So this is a big one, 520 ticks. So say you had an opening range day that was 210 ticks. So half the size. There's a quick way to do this math. So basically all we want to do is we want to figure out how much is 1 micro worth on a particular day. So this hypothetical day we'll say is a 210 tick. All you really need to do is just do divided by 4. That'll get you exactly how much risk and profit 1 micro is worth on that day. So on this hypothetical small day of 210 ticks, each 1 micro would be worth $52.50. Well, that's not enough. So maybe we need to trade 3 micros on that day. That'll get us right up to about that $150 mark. So on that particular day, you would come into the strategy. You would disable, click apply, and you just come down here to position size, and you'll say, oh, it was a small opening range day. Each contract is worth 50-something bucks. Well, I want to use 3 micros on that day. This is what we call risk smoothing. Now, on this day here, this 520 tick day, I don't want to do more than 1 contract because I want to keep my risk under 150 bucks. So we'll use 1 micro on that day. Yeah, maybe I'll show you some settings actually. So right here, this is a really cool feature that we added a few months ago. We have this checked here for this particular template at 3 losses. We're only allowed to have 3 losses, net losses in any particular day, and then we're done trading. That's it. That's it. That's all there is to it. You know, I'm actually not going to go through too many settings in here. I don't want to give too much away. But this is a cool one. You know that you're only going to risk at maximum. So here's what's really cool. So this particular day was 520 ticks, right? Divided by 4, which is a quick way to do the math, it was $130. At the absolute maximum, while I'm sleeping, there's going to be 3 net losses allowed. So a net loss would be like the first trade's a winner, then the second trade's a loser. That's break even. Then you'd have to have a loser, a loser, a loser. Doesn't have to be in a row. It just has to equal 3 net losses. So I know that I'm not going to be risking while I'm sleeping more than 130 times 3. 130 times 3. $390. Add some commissions on top of that. Call it 400 bucks. There's no way I'm waking up in the morning here in Bali and I'm going to walk over to my computer and go, oh no, I lost $1,000. It's just not going to happen. Now, it could happen because of data connection issues while I'm sleeping, because the power goes out, my VPS poops the bed, who knows. There are other things that can happen that could possibly get you to lose more than $390, $400. But on my back end, on Rhythmic, my data feed provider, my Rhythmic RTrader Pro, and you can also do this on Tradeovate, I have I go into each one of my accounts individually and I set the risk limit to $400 yesterday. So I have a safeguard here, 3 net losses of 400. And then I also have on the Rhythmic back end, basically 130 times 3, a 3 net losses. And I go in individually and I set the loss limit on the Rhythmic and the Tradovate to $400. It's because you want to include commissions. You want to give ORS a chance to come back if it does end up with a few losses. So let's go ahead and talk about a couple of these trades. Engaging the strategy again. All right, so now let's talk about like what the heck's going on here. Why is this deep shaded red over here? Well, this is when the strategy is not allowed to trade. Once we come out of this red shaded area, then we're allowed to start trading. And that's 10:30 a.m. Eastern Standard Time. There are multiple reasons that we've picked 10:30 instead of 10:10 or 10:15. 10:30, it's a half hour, end of a half hour candle. It's 20 something, maybe even 30 minutes after any 10 a.m. red news events. It's given the market time to calm down after that. And honestly, it's because that's just the best results that we've been able to achieve on our live and historical models. Something about 10:30. I think a lot of it does have to do with letting that. Oftentimes, if you're familiar with trading the NASDAQ or with futures in general, those stocks too, there's 8:30 a.m. Eastern Standard news events that can be huge. And then there's 10 a.m. news events that can be huge. So after 10:30, it's given the markets time to calm down. So we start trading at 10:30, and here you can see that there's no opportunities. And for an opportunity to get in, we need 4 things, but we're just going to talk about 3. One of them's another moving average that doesn't plot on the chart. So it's a little bit of a secret kind of until you sign up with us. Then obviously I'll let you know what it is. But I like to keep some stuff hidden for our subscribers on YouTube. I don't want to give all of it away, of course. And then there's another secret kind of deal is like what's creating these lightly red shaded zones and these lightly green shaded zones. And that's our ORS, proprietary ORS buy sell zone indicator. So we need 3 things. Let's just talk about the 3 things. Number 1, we need a close above the moving average. So here we can see we are closing above the moving average. Okay. Then you need the moving average to be white, so sloping up. So that's number 2. And then number 3, we need a green shaded zone. That's a green shaded zone. So here you can see we have our first opportunity. Let's squeeze this over here so we can pretend like we don't see it when we don't know what's going to happen. Let's make that a little bigger too. All right, let's go over that one more time. Candles closing above the moving average. Moving average is white, number 2. And number 3, buy zone. Now what? Well, now the strategy, fully automated strategy, is going to place not a market order, a limit order. This is the candle. This is a candle close here. This is a bullish candle. This is the candle close. As soon as that candle closes, we have all 3 criteria met, and ORS is going to place a limit order for a price pullback on the range level line right below that candle close. So we're looking for an entry right here at whatever price that might be, about 21,503 or so. We do have a slight offset. There's, I'm not going to give away everything in the video. So let's see what happens in the next candle. Our limit order is waiting here on this yellow line. Bam, and we fill. Okay, so as soon as we fill, then where's our target? Where's our stop? Our stop, like I was talking about before, is 200% down here. 260 ticks away. Gives us plenty of room. And our target, it's a 1-to-1 risk-reward ratio. Our target's up here. Let's make this green. Our target's up there. And the next candle closes. This is a bearish candle, so our candle closes at the bottom of the candle. And then, bam, the next candle. That's a huge candle. How big is that candle? 252 tick 1 minute bar. So yesterday was crazy. Kind of crazy. 1 minute price action. And then we move along, and our target's up here. Waiting, waiting, waiting. Slight pullback. Oh no. Guess what? Don't care. I'm sleeping. Da, 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 da. And almost filled. Bam. Target filled. So it took us to here to hit our target, and we're risking $130 on this day because we didn't want to double that and risk $260. We would rather just risk the $130. So it took us 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes in this trade. Now the average trade, this is another thing when you start using this strategy, keep in mind, I don't recommend sleeping. I recommend making sure that you have access to your trading chart and monitoring things if you can. But one thing to keep in mind, I gotta switch it back to, but that's kind of cool though. You can see with just 1 micro, let's actually look at that. This is just 1 micro over 6 months. Like how puny that drawdown is. It's pretty rad. Obviously, our profits are going to be half, but like if you wanted to be super, super safe, I mean, your average winning trade is $70, so you're keeping your average winner under $100. That's pretty cool with 1 micro. But let's bump that back up to 2 because that's what we're used to seeing. Let's go back into the strategy, disable. Okay. But, actually on this day we're only risking 1 contract, but that should kind of get you an idea of what the risk smoothing is all about. So, we're looking to adjust the amount of contracts we're trading on any particular day based on the size of the target and the stop. But what's also really cool is the next trade that we get into, it's going to be the same exact risk and the same exact target. All right, so here we are. Our moving average has turned, let's talk about the closes. Our candles have started closing below the moving average. Now, our number 2, our moving average has turned blue. And then here, we have a sell zone. So we have check 1, 2, 3. All of our criteria are met. We have the confluence that we are looking for. And this candle is a bearish candle, and it closes right here. So now, because it's a short, we're going to be looking for a pullback all the way to this line. ORS will automatically place a sell limit order right here. Offset just a little bit. And now we're going to wait for however long it's going to take for this limit order to be filled. And not quite. Now we're looking for from this is a bullish candle, so it closes at the top, and we're still looking for that limit order to be filled. And bam, there we go. Limit order is filled. Same thing as before. Our stop is going to be here, and our target is going to be down here this time because this is a sell trade. We're looking to make money by selling this index, which, it's pretty cool. A lot of people don't know. Most people don't know anything about trading. They think you can't make money if the market's going down, but you can make money if the market's going up or down, whatever. Anyway, so our stop's way up here. Not way up here. Well, I guess, 260 ticks up there. So it's 1 micro is $130 risk. Moving along. A few minutes later, and now we're back in profit. And it doesn't matter if we turn into a green zone or the MA changes color. We stay in that trade. That's our decision. We're sticking to it. And almost, we're like 1 tick away from being filled on our target and target. So this particular trade took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Now, these are actually really fast trades because if you look, I was going to mention this earlier. If you look at if we look at a historical, like how, what are you going to expect if you're monitoring your trades? What is the average length, duration of each trade? I think it's like 20 minutes. So 21 minute bars. actually more than that, 27 minutes and 60, average time in market, 27.69 minutes. So a little under a half hour per trade. So the market was moving yesterday. It was chopping, but it was moving. Right? So I went over one long and one short. Let's go over one more long. And yeah, I just want to mention again, book a meeting with me. Find us on, maybe this will start working again. StratGeeks.com. I'd love to hear from you. Comment on the video, subscribe to our channel, all that stuff. Yeah, crazy. For some reason it's not coming up. But yeah, find our StratGeeks.com. Scroll down. And then join our Discord server. You can also email me. I don't respond as fast, but you can email me at, I'll just put it in here. The number 1 trader jake@gmail.com. So you can email me there. Yeah, let's talk about this long. Let's go over another trade here. So we do have another moving average that needs, so we actually have 4 things that need to be in sync to get into the trade. There's a secondary moving average that doesn't plot. There is this moving average that's on here now, and then there's our proprietary buy sell zone indicator as well. And yeah, fully automated. Okay, so we can see that our candles are closing above. So we're only allowed to trade one. So here we're not going to get into a trade because we're already in a trade. So we are getting ready. We've exited this trade. Now we're waiting for closes above. There, that's happening. We're waiting for the moving average to be white. That's happening. Now we're just waiting for one more thing. We're waiting for that buy zone. Bam, there it is. There's our buy zone. So we got all of the confluence, and then our secondary moving average is also probably closing above. So now, as soon as this happens, we're gonna, well, you know what? I don't really want to give away that part either. So we would be looking for a pullback to this level, although there is kind of another little secret sauce thing about why this would not actually be where the order is placed. Now we're looking at a candle closing here. So we're actually going to be looking for this pullback. And, you know, sign up with us. I'll let you know. I'll let you know what that's all about. So we're looking for a pullback to this line here. How many ticks are we waiting for a pullback for? 34 ticks. Bam. Okay, so then we're in. This is the last trade that I'm going to go over, and then we're going to be done. So our target's up there. Our stop's down here. And now we're halfway to target. And again, you know, so up here we have a limit order that was automatically placed by ORS. A limit order to sell back the market, and down here we have a stop. And target. So there you have it. And yeah, somehow we went 7 for 7 yesterday. And again, you know, I wouldn't expect that every day, but I wanted to make a video today just because this is awesome. You know, look at all these wins. Pretty freaking cool on the NASDAQ 1 minute chart. Pretty cool. And then we get to our last trade of the day, is at, what is it, 158. And the reason we stopped trading at 158, so you can see we're not allowed to trade in this red stated zone. There's a few different reasons, but the main reason is at 2 p.m., there are also crazy red news events called FOMC events. Could be an FOMC statement, could be Jerome Powell talking. Basically, the Fed making crazy stuff happen with the market, and our goal is to be not taking new trades when that craziness is happening. And I also recommend, or at least I try to be all flat if that's going to happen. So like here, you know, right here, I probably would have just gotten out with a small loss or a break even, you know, But yesterday was not an FOMC, so we were in this trade all the way till here. We actually did hit the profit. So it's not going to close. It's not going to close out your trade actually until, I believe we're allowed to keep trading all the way till 15:15. So if we didn't hit target here, then we would have auto closed, depending on how you have your template set up, at 1600 at 1600 or 16:15, right around in here, depending on where your template is. Anyway, okay, geez, I did not expect to make a 50-minute video. This is pretty cool, though. It's a very comprehensive look at what ORS is, all the way from the risk management to the backtest to the execution of trades. Again, there's my email, onetraderjake@gmail.com. Also, go to our Discord channel through our website. DM me. Let's set up a meeting. If you have questions, I like to meet with people. Anyway, it's the holidays, and my daughter is away in Australia with her mom, so I got some extra time. Let's get on it. All right, everybody. Jake, StratGeeks, signing out.